What do you mean by sales tax exposure?
So when a business has historical nexus in a state or several states, and they have not registered, have not collected sales tax, have not reported that sales tax on returns, that's going to create exposure tied to their taxable sales to customers in that state. So that's typically what we try to uncover when we first get engaged with companies that have no idea what their tax obligations are.
And how do companies typically discover that they have exposure?
Well, there are a couple ways. I guess there's the bad way and the worst way. The one way would be the reactive way, and that's because you get audited or you get a nexus questionnaire, or you're selling your business and going through due diligence or going through investment rounds. And as part of that due diligence, your historical exposure gets uncovered as part of that exercise. And that's kind of the worst way it could be identified because you're in a very much a reactive mode. The proactive way of doing it would be engaging sales tax advisors to conduct a nexus and exposure analysis. And then you have a clear roadmap of where your historical nexus and exposure is, and you can make informed decisions about what you want to do to address your historical obligations as well as your prospective obligations.
And what exactly is the difference between having nexus and having exposure?
Well, a business that is regularly monitoring their sales and their activities that might create physical presence or economic nexus might cross a new threshold and realize they now have nexus in new states by virtue of their ongoing activities, and then they would proactively register and comply on a go-forward basis. There'd be no exposure there because they've been monitoring it all along, and that's often what we do with our clients. Exposure happens when there's been undetected nexus that has existed for a long time, and the company has never engaged an expert to evaluate that or developed and implemented processes to be able to manage their sales tax obligations.
And what are the biggest warning signs that a business may have exposure?
Like I said, they have no process in place at all to actually identify and monitor where their activities might be creating either physical presence nexus or where their sales might be triggering economic nexus in new states. That's probably the number one way. They're registered for payroll in states, but they're not registered for sales tax. They're sending independent contractors boots on the ground into states, and they're not registered for sales tax. We just spoke with a new client that had an affiliate that was conducting installation activities for the out-of-state selling entity. And they came to us concerned about whether or not that out-of-state entity sales were creating economic nexus in various states where that remote seller was selling into. They were unaware that having this affiliated entity do the installation services on behalf of the out-of-state entity, that was creating physical presence nexus for them.
Are there certain industries or business changes that make exposure more likely?
I think every industry is going to struggle with these same issues. I think right now, cloud-based solution providers like software as a service, digital goods and services, and a lot of e-commerce companies are the ones that are addressing this or struggling with these issues the most because they're in very much rapid growth industries and industries that the states are responding to and changing their laws in order to identify those those revenue opportunities for the state.
What's the first thing you look at when evaluating a new client's risk?
I would say the first thing we're going to look at is, do they have a process in place for monitoring their nexus. Probably the very first conversation actually that we have involves the company's identity. What do they think they are? What does their website, what do their agreements, what do their invoices say about the type of business that they are? I'll give you a good example here. We had a client come to us and they believed they were an information service provider, and they felt that because a lot of this information was custom, they didn't have a lot of sales tax obligations in that many states. They did not think of themselves as a SaaS company. The more we talked to them, the more we reviewed their website, their agreements, the language that was on their invoices, it became very apparent that yes, while one of the underlying things that was being provided to their customers was custom information services, the real crux of what they were selling in the marketplace was SaaS. So they very much were a SaaS company. So I think getting to understand the identity of your company with respect to sales tax obligations is probably the first thing. You really want to be able to classify what is it that the states would think we are selling.
How quickly can exposure grow if it's ignored?
Well, if you're making taxable sales in the state and you're engaged in nexus creating activities that can create physical presence nexus, it's going to grow really rapidly because you're not even waiting until your sales cross the economic nexus threshold. If you're not monitoring your obligations, your sales at all, then obviously every sale over that state's nexus threshold is going to create exposure for you. And if undetected, it becomes very difficult 3-4 years later to try and recoup those taxes from your customers that you haven't been collecting at the time of the transaction.
Tell us about a client who came to you for one issue but ended up uncovering a much bigger sales tax problem.
So this is fairly recent. We had a company come to us that wanted our assistance with implementing the sales tax software they had just purchased. They had that sales tax software company conduct a nexus study, and they wanted us to help map their products to the appropriate tax codes and help set up the tax software. The more we discussed with the business what they were engaged in, understanding their identity, understanding where they had nexus, a lot of the preliminary questions that we ask in getting to understand new clients before we even conduct a nexus and exposure analysis, we learned that they were looking at themselves as one taxpayer, when in fact they had two affiliated entities that both sold very similar product lines, but being that they were two separate legal entities, those are two taxpayers. They were looking at implementing this software for one taxpayer and registering in several dozen states. What we uncovered as a result of talking with them, and was really surprising to them, was that they had two legal entities, and for sales tax purposes, there's no disregarded entity. Each legal entity with its own FEIN is its own sales tax collector, its own retailer in the eyes of the state, and both need to monitor their nexus separately, register where they have nexus, and collect and remit taxes separately under their own accounts.
What's the most surprising way you've seen a company discover that they had sales tax exposure?
The most surprising way is gonna be you're contacted by a state and that state conducts an audit and identifies that you had historical nexus. But I think even more so would be because it tends to be something that it's not just one state, it's all states at once, is when it's discovered during due diligence. So you're going through either the sale of your business or you're seeking investment, and the investor, the buyer, brings in its due diligence team, and they're looking for sales tax exposure. They're looking for overlooked nexus. So when you have no system in place for sales tax compliance and multi-state nexus and exposure is identified all at once, Not only is that a tough pill to swallow, but it also can threaten the deal itself because of the amount of exposure.
Can you share a story where a business thought everything was fine, but your team found a hidden risk?
Sure. I think I'll preface that by saying I think most companies that come to us don't think everything is fine. They typically are concerned because they don't know. They know that they don't know. They don't have a compliance process in place. And someone steps up and says it's time for us to really evaluate our sales tax compliance obligations. We've grown this business to the point where this is a critical concern. Where companies think they have everything all right and we discover additional risk, additional exposures, most often when we take over managing the sales tax compliance for businesses. They're utilizing sales tax software and it's just kind of running along and it's doing its thing. They're often using the sales tax software company itself to file the returns. So no human expert is really overseeing the process to ensure that there's no overlooked nexus, that they are collecting everywhere they should be, that they're not collecting in states where they're not registered or shouldn't be collecting. We get involved and we see that, oh, there actually is overlooked nexus, or you have nexus turned on and are collecting tax, but you're not registered in the state, or you're registered in states where your sales are actually exempt and you don't need to be registered, and you're just filing zero and wasting money on returns you don't need to be filing. Or you have missed filings because the state has changed your filing frequency, missed notices, things like that. So those are often the situations where companies think everything is okay, and then we get engaged and they kind of realize quickly once we do our review of their settings and their accounts that, wow, there's actually a lot of risk that's been just sitting and growing.
So with all that being said, if a business owner suspects that they have exposure, what's the first step they should take?
They should contact the sales tax advisor and compliance expert team to conduct a nexus and exposure analysis. That's first and foremost. Really understand your identity. What is it that states would classify you as? Are you a SaaS provider? Are you an information service provider? Are you selling digital goods or services? What's your identity and where do you have nexus? And if you have historical nexus, what's your exposure look like? So you can map out an action plan for addressing any historical exposure and then move forward with automation.